Well, let's talk about the pharma index. Hello and welcome. You're watching Market Edge. The pharma index has outperformed a weak market led by gains in Dr. Reddy's, Alembic Pharma, Lupin and Zydus Life on a series of FDA approvals, inspections and strategic announcements. Positive global trial results from AstraZeneca also lifted sentiment. Shares of Kotak Bank declined after CEO Ashok Vaswani announced he will step down when his term ends in December, citing personal reasons. The bank has begun the succession process, with management stating that growth and strategic priorities will remain unchanged during the leadership transition. Shares of Persistent Systems declined after announcing a €1.3 billion all-cash acquisition of Nagarro. While the deal significantly expands Persistent's European presence and digital engineering capabilities, investors remain cautious over integration risks, bridge financing and the potential impact of Nagarro's lower margins. Shares of Astral fell as investors reassessed valuations following the proposed demerger. While brokerages see long-term value creation through focused businesses, near-term concerns around valuing the chemicals business, execution risks, and a potential multiple reset wait.
Hello and welcome. You're watching Market Edge here on ET Now. Let me quickly take you through how the day has been for markets. It was another kind of a tough day because we started in the green and thereafter we flipped back into the red. We were down around 0.5% thereabouts at close and around 100 odd point shave off on the index is what we experienced today. In terms of sectors, IT, banks both were in the red, and that caused more pressure, at least on the index itself. The index was holding up fairly okay at the start of the day, but we gave up some of those gains. And that's largely because of the way that we saw moves within the banking pack play out. Kotak Bank was the top loser, 3% lower. The other sector which saw pressure was the Nifty Auto. If you pull out the Nifty Auto Index intraday, you'll see that the pressure just got worse as the day went by. And therefore, a lot of the auto stocks actually sat in the red and were some of the top losers on the Nifty Index as well. M&M, Maruti, Tata Motors PV, Aisha, Bajaj Auto were just some of the key laggards within the top or the bottom 8 stocks on the index today. But that's with regard to stock-specific action on the Nifty. I'll quickly take you through sectors as well. And the sector tilt was that pharma did very well for itself on a day like this. Auto was down 2 odd %. The Nifty IT was down 1%, 0.5% low on the Nifty Bank. In fact, the Nifty Bank was down 0.75% thereabouts. So the sector tilt was also in that fashion. You saw 1% low on the Nifty PSU Bank with Can Bank, PNB and the likes also under a bit of pressure. FMCG was down around 0.5%. Defense was flat. Metals and pharma were the outperformers. But that's really the tilt of the trade with regard to sectors. Snehi, with regard to broader markets, how did they fare?
So the broader end of the market was absolutely in tandem with what the Nifty was doing. Harsh, small cap index was lower by about 0.5%. You had the mid cap index lower by 0.3%. And that's the kind of moves that we've seen from the broader end of the market. Sectorally, you only have handful of sectors. In fact, only 3 sectors that have shut shop in the green. That's Nifty Pharma, Metal and Energy. And on the flip side, you've seen some of the biggest cuts coming in on Nifty Auto. Even that Delhi EV policy news couldn't cheer the index by a lot. 2% cut over there, followed by oil and gas, IT, PSU Banks, Realty and Nifty Bank. Of course, lots of large private sector banking news is something we've seen there. But while that's...
And 1:2 on the advanced decline also, actually.
Yes.
That's where some of the pain also resided. Just the fact that the declines outstripped the advances by quite a bit. But let me go across. Sajid's here with the FNO roundup to give us a picture as to what levels to really look out for and what likely played out. Sajid.
Thanks, Harsh, for that. If you look at the market slipped below the 23,950 mark, closing just below that. And we've seen some kind of rollovers that's happening and unwind also happening for some of the long positions during the day. If you look at the open interest positions, overall 40% jump in open interest positions, which is there. So what we are looking at going into tomorrow expiry is roughly around 60-65% rollover for the Nifty alone. Look at Nifty Bank. It's down nearly 0.77%. Again, we have seen nearly 38% jump in open interest for the July futures there. So again, there we are seeing more than 60% of rollovers coming in, going into last day of expiry there. But Nifty Bank, constituents, you have to, HDFC Bank saw some long positions which got built up. Bandhan was seeing some short covering. AU Small Finance with the long build up, and Federal Bank with the short covering there. So overall, if you look at as the private and public sector, there was a short build up which is happening, and that's primarily because of the July series where the rollovers were happening. So shorts getting added there. Look at the July 7 series, and you'll see that 24,000 I was acting as a very strong a point in the morning with put writers having a good there, but towards the end we are seeing a lot of call writing coming in, and the distribution chart will show you that towards the end it's almost at par between the call and put writers at the 24,000 level there. So the market ending below the 24,000 today. Futures gainers, if you look at it, you have Nalco, LIC, Vedanta, all seeing some shorts getting covered there. If you look at the losers, you had Persistent down 10.8%. That got hammered badly after the acquisition announcement which came in. Astral is seeing a long unwind, and others as well. Open interest gainers include KE Industries, Persistent, and SGFC, AMC, with some shorts build up getting built there. In the losers, you had Godfrey, where there's a long unwind, JSW seeing a short covering, and Force Motors seeing a long unwind. So overall, we are heading into Tuesday expiry with a strong, rollover which has happened for the Nifty Bank. There's an unwind which is happening for the long positions, and banking looks a little weak going into tomorrow.
Okay, thank you so much, Sajid, for that. Let me bring on board Piyush Pandey for this conversation. He's Senior VP, IT Lead Analyst at Centrum. A slew of acquisitions, and today's acquisition by Persistent, or rather the weekend's acquisition by Persistent, was no different. It was a large one. There's debt on the balance sheet now. Piyush, what in your opinion really disappointed the market with regard to the acquisition?
Yeah, I would say it is like a typically a large acquisition, and revenue close to $1.1 billion of this acquired company. And I would say it can lead to some near-term integration issues, and that is something which the market is anticipating, and it can impact the margin as well as the growth profile. So that is what something which the market is anticipating, and that led to this steep fall in the stock price today.
That's what I was going to ask you, right? An 11% trim off on the stock. Do you believe that was warranted? Do you believe this was an overreaction from the street? And give us some of your views. We understand that there are concerns, but largely, isn't this deal rather positive for a company like Persistent?
See, it is sort of overreaction. So if you look at, say, medium to long-term perspective, it is very positive because it leads to, say, synergy in terms of verticals. Persistent gets access to verticals like industrials, consumer, public sector, and plus it helps to deepen its presence in Europe, where Persistent had very little presence, and plus it gets to reach a size of $2.9 billion revenue company. So that can help Persistent to say bid for larger size deals also. So overall, I would say it's a positive step for medium to long term, but integrations and plus I would say that can lead to say near term challenges. But I would say for tier 2 company, for any tier 2 company, say Coforge or Altium Mindtree, they generally do acquisitions to scale up.
Piyush, just trying to get a sense, therefore, Nagarro claims that margins can recover. I mean, they're at around 11.5%. By recover, I mean move towards the 20% number, because that's where Persistent sits at. Do you believe that's doable based on your understanding of the business and of the possible synergies which could arise as part of this acquisition?
Yeah, I would say, of course, there will be some cost synergies, and margins can improve from, say, current EBITDA margin of 13.2% to, say, closer to Persistent level. See, the management feels that because of this scale, there are certain costs like, say, SG&A as a percentage of revenue that can get optimized. So margin-wise, of course, there are challenges, but don't see a major concern like so. Just like say, if I would say if integration happens, like even if the margin settles at say even 100 weeks lower compared to persistent, it would be taken fine. Like so, if you look at say the price which the persistent is paying, like and value in terms of like say capabilities plus verticals and so in a way I would say looks good. Yeah.
Piyush, how should one start looking at numbers going forward next couple of years? How does that change or how does that shift? So what should the blended margin look like, say FY27, thereafter FY28? What should the margin journey look like for the consolidated combined entity? And what should the interest cost also look like?
See, this merger happens only towards the end of this year.
Okay.
And see, we can expect that the combined EBIT margin would be closer to like say 14 to 15%. And plus, in terms of growth, I still feel that they can do double-digit growth post this integration. And in terms of interest cost, like say they are taking debt of close to say $1.5 billion, and of course, and that will be say mostly serviced. That can be easily serviced to like say current cash as well as their current combined EBITDA generation. So that's not of the concern. Like so, had this company gone for like say QIP, like that would have led to like say a significant dilution. But with the current cash holdings plus the cash generation from the combined company, that is not a concern. I would say the real concern is the growth profile might get slightly moderate, plus they would take some hit on operating margin.
Right. Piyush, I was going to ask you on debt, and you did say that debt doesn't seem to be that big of a concern for Persistent, but Persistent has historically been a company that usually has zero debt on the books. The debt to equity ratio is almost zero. Can you give us a sense of how do you think the company is going to pay out or rather pay off this 1.4 billion euro loan that they have taken, and also how much time that's going to take? And do you believe that this is one of the biggest concerns of the street given the kind of slump we've seen in the stock price?
See, debt is not a concern, I would say, because anyway, like say IT companies are cash generating machines, like so they are cash generating machines. And plus, they also plus Persistent also has a reasonably amount of cash on its balance sheet. So I would say they would be able to service this debt. And I would say the real concern, see, debt. Generally, IT companies they do take debt when they have to expand, like say, or when they have to acquire certain, like say, other entities. Like so, in this case, I would say it's okay. Like say, when they are expanding aggressively, they can take debt, and which can be serviced. Like so, mostly I would say the concerns remain primarily because Persistent used to provide 15-16% on a CC basis, like say year on year, and whereas like say Nagarro is growing at say 6 to 7% year on year. So with the combined entity, unless there are revenue synergies now, growth might take a significant hit. So that is what the street is mostly concerned.
Does anything change for you, Piyush, when you're looking at Persistent? Target price, in terms of expectations, what changes? Would you go out and buy just given this 11% fall in the stock price?
I would say, of course, the valuation has become very attractive. Now it is trading at close to 25 times on FY28 EPS. But having said that, anyway, like for the IT sector, there are demand challenges, like say with regard to AI, and even this first or second quarter would likely be muted. Like so, one can have a wait and watch approach, and there is no need to hurry. I would say, especially when with regard to IT companies like that.
Piyush, structurally, who is best placed to capture growth in the current AI wave, right? I'm trying to understand. We were speaking with the management of Tata Tech a few weeks back, and he said that Warren Harris, he told me that the quantum of time which used to be taken for the development of a car has shrunk from 48 months to 24 months, which means growth will be much more front-ended. Models will get launched far quicker. So is this one of the big positives from the Nagarro acquisition? Because auto is obviously one of the big areas which Nagarro focuses on, which Persistent didn't have a meaningful presence in. That's the first part of my question. Second part of my question is with regard to ER&D in particular. alongside ER&D and especially auto ER&D, are there any other verticals where you're seeing a marked difference with regard to timeline shrinking?
See, I would say verticals like, say, healthcare, tech, BFSI, they are better placed compared to, like, uh, say, say manufacturing or like say energy or utilities. Like, so these verticals are better placed, and companies with a deeper domain capabilities in these verticals are likely to do well. So having said that, I would say tier two companies like say Coforge or Persistent, they are slightly better placed compared to say bigger guys. And but still, I would say things are evolving at a very rapid pace. So maybe we can get more clarity say over the next 1 to 2 quarters how demand is really shaping up for the sector.
Okay, and Piyush, this is a hypothetical that I'm throwing your way, and this is slightly more long term. Do you believe that the time it's going to take to integrate such a big business, from what I'm reading, this Nagarro business is 60% of the size in terms of that, it's 60% the size of Persistent's business. So to integrate such a big business, to repay the loan, to try and grow the margins, if all of this takes slightly longer than what the street is estimating, are you foreseeing any downgrades for the stock?
See, of course, if integration takes longer and becomes more complex, then Persistent can see multiples derating. Like that can happen. Like and see, obviously, and also like say, Persistent does not have a track record of integrating companies like which we have seen for like say someone for like say Coforge. And given that this is a much bigger acquisition, 60% or like say close to 60% of Persistent revenue, I think. Management needs to be, I think, very focused with regard to, like, say, cost and revenue synergies. And any delay in accruing those synergies might impact the valuation multiples of the combined company.
Okay, Piyush, as always, thank you so much for coming in, giving our viewers and us all of those insights. Always a pleasure speaking. All right, what we'll do, viewers, in a very short break, come back. We'll have a chat with our technical analyst, try and get a sense of what is it that you want to watch out for in terms of trade and levels for the trade on Tuesday. I beg your pardon. So stay with us. You want to know those. Stay with us.
Back with Market Edge, and so much to talk about in terms of the trade setup for Tuesday's day of trade. Let's bring on board my colleague Ravinder, who's joining us with a list of all the events to watch out for and keep on your radar globally as well as back home for Tuesday. Ravinder.
Well, as in India, all eyes will be on Nifty monthly expiry, which could lead to heightened market volatility. And on the global front, investor will track key economic data from the US, including consumer confidence and job openings for insight into strengths of economy and the labor market of the US. And the UK will release its GDP data, while China will announce its manufacturing and non-manufacturing PMI numbers, providing an update on the business activity. And from Asia, in Japan, Japan will announce its unemployment and industrial production data, which will be closely watched from by the investor. And on the corporate front, global earnings from Nike and Constellation brands will be in focus, offering cues on the consumer spending trends. And among the domestic corporate development, the board of Midwest Gold will consider a stock split, while Shanti Gold's board will discuss a fundraising proposal. And in the other key events, European Central Bank Chief Economist Philip Lane is scheduled to speak, and from India, India's Commerce Minister will meet stakeholders to discuss the special economic zone reforms. So these are the key events that market will keep an eye on 30th June 2026.
Okay, thank you so much for that, Ravinder. Let me bring on board Lakshmikant Shukla, Technical Analyst, Institutional Research at Yes Securities India, joining us this afternoon. Lakshmikant, great having you. Let me first start off by understanding your call on the index itself. That little bit of weakness that we've seen Monday, can it reverse Tuesday?
Yeah, good afternoon. So if we look at the weekly chart of Nifty, where it has formed back-to-back doji candles over the past 2 weeks, while this signals a degree of indecision at current levels, I would read this more as a healthy pause within a larger uptrend rather than any sign of trend reversal. What gives me confidence in this view is the sheer momentum of this index that has demonstrated from its lower level of 23,070 to above to 24,200 merely in last few sessions, which tells us the underlying buying interest remains quite strong. Although it has formed shooting star pattern on Thursday near its key resistance level of 100 DMA does warrant some near-term caution, but we will recognize that this is essentially a reaccumulation phase where smart money consolidate positions before the next directional move. In the near term, I would expect Nifty to trade in a range for a couple of sessions with 23,700, 23,800 acting as a credible support zone and 24,300 capping the upside. A sustained breakout above 24,300 would be a significant development for the Nifty, and it would open the door toward the April swing high around the zone of 24,600. So Nifty, as long as it hold up the levels of 23,800, our view will be positive, and we could expect this breakout on the upside. Now, if we look at the structure of Bank Nifty, so Bank Nifty is clearly outperforming the Nifty because we have seen surge of around 10% in this June month compared to roughly 5% on the Nifty, and this leadership is unlikely to fade anytime soon. The macro setup is actually turning more favorable for financial with crude oil started decreasing and dollar index started rising from and broader commodity weaknesses collectively easing inflation concern. So all of which creates a conducive environment for rate sensitive sectors. So my sense is that banking and financial stocks will continue to lead the broader market in the coming week. Man, Bank Nifty looks well positioned to test the psychological level of 60,000 with strong support, which is seen around the levels of its 200-day SMA that is placed around the zone of 57,000, which should be treated as the opportunity to accumulate quality names in this space. Beside this BFI space, I'm also positive in pharma and Nifty healthcare.
Okay, so those are some of the pockets that are looking good to you, and 23,800 is something that we'll be watching out for on the bottom for the Nifty. Well, Lakshmikant, also give us a sense of some of the stock-specific recommendations that you have for our viewers. Anything that's looking good on a stock basis or a sectoral basis?
Yes, I have found two stock which is showing resilience in this falling market. First one is from capital market space, that is MCX. So MCX has formed a strong base around the zone of 2,800 from last few days. It has been consolidating, but in today's sessions, it has given consolidation breakout on the upside, reclaiming 50-day SMA levels with the formation of bullish candle. So one can buy around the zone of 2,900 to 2,950 and can expect the target of 3,100 with the stop loss of 2,800. A second stock is from pharma space, that is Torrent Pharma. In today's session, it has given symmetrical triangle breakout on the daily chart. RSI is already in the positive territory. MACD has also given bullish crossover. So we expect that strength in Torrent Pharma as well. So one can accumulate or buy this stock around the levels of 44,620 to 640 and can expect the target of 4,920 with the stop loss of 4,500.
Okay. All right. Lakshmikant, I wonder the view with regard to pharma and whether you have any specific picks within that space, any favorites within that pocket?
So I have already given one call of Torrent Pharma. Beside this, Loris Lab and Cipla, Lupin, these are some other stocks which we can look for taking long position. That is that Loris Lab is already trending higher. It has given consolidation breakout on the daily chart, and it has formed a bullish Beltwood candlestick pattern. So we expect upside move in Loris Lab, already given breakout from the levels of 1,480. So that would be the good support for Loris Lab. We expect a bullish momentum toward the levels of 1,560 to 580. And Cipla has given a range breakthrough in today's sessions. So here we also can look to accumulate this stock around the zone of 1,450 and can expect upside move toward the levels of 1,520 with the stop loss of 1,410 on the downside.
And some of the losers as well for Monday, Persistent, Astral, any view on any of these? Would you go long at any point of time on any of these stocks and levels, if at all you can give us?
See, today Persistent has given gap down opening with the formation of bearish candle. And if we look at the broader trend of Persistent, so it is on the downside and it has already breached its key support levels of 4,500, which turned as the strong resistance. So till it hold below this level, we will see more weakness in Persistent, and probably it could find some sort of respite near its 200-week SMA that is placed around the zone of 4,200. Would be the some recovery levels for the Persistent, but if it failed to provide any recovery, then further decline could be seen in Persistent toward the levels of 4,000.
Appreciate that view, Lakshmikant, and appreciate your time today as well. Thank you so much for joining us. But with that, viewers, we're completely timed out on this edition of Market Edge. From Harsh, me and the team that put this show together, thanks so much for tuning in.